Hey, everybody, still here. Daily Market Pulse for this Tuesday, February 18th, 2014. We've got a short week. Monday was closed yesterday because of the holidays, of course, President's Day. So first day back out, mixed, although in higher volume. And it was fairly quiet. It kind of came out as a bang and then kind of remained quiet for the rest of the day. For the most part, nothing earth-shattering, nothing great. But markets, in particular the Nasdaq, new all-time highs. Interestingly enough, there. So that just continues to go higher and higher, just like shockingly. It's kind of nutty, but let's take a look at the charts. So Dow Jones was one of the indexes that did fall. So we talked about this before that it's into a kind of a resistance area a little bit. It's just over the 50, which is flat, almost still declining. 20 still dropping as well. Although we do have the 8 moving average as of today crossing through the 20, but that's a dead cross still. And so at some point you got to believe there's going to be some kind of a tapering and slowing down. Target still remains 16,000, or sorry, 18,500. 16,500 to the upside. But with the trends the way they are, you got to believe at some point there's going to be some kind of consolidation or some kind of a drop off, especially when it's overbought like it is now. But so a slight pause, at least right now, above the former kind of a pivot polarity area of some sort, but also the 50-day moving average. So for now, it pauses. Let's take a look at the S&P. S&P just kind of grinding slowly right into the former pivot area, the highs that we had established at the beginning of the year in January. Um, and so it's fast approaching that. Again, dead cross, 20 below the 50, 8 now crossing back through the 20. So there's short-term trend is strong. The intermediate trends are a little confused going into resistance area. You'd expect that probably there's a pause there. They probably run into a little bit of trouble at that level just because of the way the moving averages are moving. Plus, as I said, the direction they're going. Plus the overbought situation as well, overbought condition on the stochastic. So watch out for the top side. Look for a reversal candle, probably to the back to the downside. Support back down here, 1820, 1810, as low as maybe 1800. Nasdaq, as stated earlier, made new highs. So it crosses through 4250, top of the trend line, channel line area. Almost anyway. I can actually move that up just a little bit like this right here. There's actually still a hint of room above into 4300. So that's pretty impressive. But again, all you're looking for now is it going to go higher, or is this actually going to fail from here, giving you a falling off the roof? So this becomes important at these stages when you get that close to a target on a breakout of momentum of some sort, change of polarity, but also extremely overbought and extremely extended. So what do they do with this? Of course, support on the downside naturally is 4250. Then below that, of course, 4200, and all the way down to 4135 to 4140. So we'll see how that goes there. TSX through 14,000, we knew that. Through the 1618, a little bit of a rejection, had a little upper shadow there, 14,000 plus. Look at all the green candles on the way up. Now it's had a few occasions. If I just go backwards like this, I see there's an upper shadow, that was a little bit of rejection. Moving averages going sideways in a sense. It still popped. Another little rejection there, another rejection there. Did all the way back. But I knew 14,000 was an absolute place that psychologically they were going to take it almost regardless. Those little upper shadows, while they look like little rejections, there's no resistance anywhere. There's nothing to really dictate or to warrant any kind of real reversal there. Those are probably more so a little bit of selling at the end of the day, allowing it to reset to go higher again the next day. Now, what's interesting and surprising is it went right on through 14,000. Now we're seeing a little bit of rejection. Now, this to me has more importance here than it did, in the prior days. So this we have to watch out a little more closely. We've been overbought and very extended for a much longer period of time now. So this becomes much more significant now than it did before. So pull back into 14,000 makes sense. And of course, percentage-wise, possibly lower than that 8 moving average, maybe even as deep as the 20, or like some kind of percentage that might coincide with those levels. So we'll have to see how that goes too. DAX here, little spinning tops and little doji formations here at 9,600, just below the former peaks at 9,800. So there's still room in my opinion, to go higher into the Bollinger Band as well as the former peaks. They could still take it there for sure. 8 crossed over the 20 and the 50 now, so there's at least some short-term strength to the current trend there. The 20 is flattening, the 50 is still kind of rising, so there's decent strength there to go higher, at least into 9,800, you'd think. So we'll see how that goes. Otherwise, if it fails, going to the 8 moving average, maybe as low as 90, 94 and a quarter, 94.50. Dollar Canadian dollar looks like the 50% retracement at 109 seems pretty obvious. Look for a test of the hammer, test of this 50% area for a bounce higher. Otherwise, a failure below this 109 area, you're looking much lower, looking maybe all the way back down to 107 once again. And meanwhile, the euro busting out. So it did get into 137. It made new highs. It's going right on through, looking to the next target level. Now you're looking at levels up here, right about here. So there, and then possibly higher, of course. We're looking at 138 to 138 and a quarter, somewhere in there. That's the target. Otherwise, support at 137. The mention of Treasuries pretty much, I think, continues. Pretty much with that bull sash coming off the 618 retracement looked to me like higher for sure. Certainly a confirmation above 133 and some change would certainly add to that notion. I think that's pretty much today confirmed that target still comes back up to 135. So I think Treasuries. And once again, the question arises: if Treasuries are going higher, what does that mean for the markets? And that's why it's just I just continue to shake my head, thinking the markets keep going higher and higher and higher, and it's just mesmerizing, I guess you can say. It's just unbelievable. Japanese yen was acting similar to Treasuries in a sense that it was coming off a retracement, coming off a moving average. You see the crossover, the 8 still above a 20, which is rising above now a flattening 50. So golden cross, the trends are strong. This could take off hard and fast. It's quite possible. If this trends continue the upside with kind of a rounded bottom formation here, a little bit of a scoop like, you could see this thing rip pretty hard, potentially right back to the highs that occurred early February. So keep an eye on this. Naturally, any failure below the lows, you can see right across here. Anything below that, you're probably heading further south naturally. So anything's possible naturally at all times, but right now looking like it's more of a setup and more of a bias to the long side back to the original highs I just mentioned. Right through there, there's a series of highs that are all coinciding there, 3 in a row. So that's your target. And then beyond that, let's see. Well, and then it goes all the way up much higher, probably all the way up into here. But right now, first things first, you're looking at those two levels right now to negotiate. And gold, like the markets, amazing. So it went 2 consecutive closes above the 200-day moving average, right into the target of 1320. 1320 was actually a measured move, as well as a former pivot area. So that actually coincided really, really well with a spinning top today. So that could be your sign that a pause at a minimum is going to occur, a little bit of a retracement, probably back to the 8 moving average, maybe the 200. 1310 to maybe 1300, and then it might drop lower back to 1280 since it didn't really test 1280 per se on the way up. So that's always a possibility as well. So anywhere from here down on the downside, otherwise a momentum break above here takes you to 1360 almost immediately. So mentioned silver was lagging enormously behind gold. Gold was the sign that things were going higher, and silver was still lagging and just not ever catching up. And mentioned if once it breaks 2050, this thing could rip roar in a hurry, and it did so. 2 days, Friday and well, essentially, yeah, Friday and today, for the most part, just ripped into this 22. 22 being also the measured move. 19 to 2050 is $1.50. $1.50 above 2050 takes you right to 22, and that was the measured move. It accomplished that in 2 quick days. Next target 23 if it has any kind of added momentum to continue higher. It's just now getting overbought, but that's the move. Now any drop from here, you're looking for a retracement, you're looking for a retest of maybe 21, maybe 21 and a half, 21 and a quarter, but all the way down to 2050 possibly as well. Any of those are possible naturally. Crude, well, crude went right into our target, 103 essentially, right into that. We were talking about 101, it blew through that. It went $2 today, right into the 103 area, hit a high. Let's see here. high 102.66, 102.61, so not quite 103, but essentially that was the area, the range, or essentially the vicinity that we were looking for, 103. It pretty much did that again, breaking out after 5 consecutive doji high waves, sitting right on top of the 200. Note the 8 moving average approaching, and then now because of the move higher, crossed over the 20, having crossed over the 50. So all of the trends intermediately, short term, were all getting stronger. As long as it was sitting above the 200 and just perched on top of that century mark as well, it had all the possibilities, probabilities of going higher, and sure enough, it did. Now, so now you're at 103-ish. Next target probably 104.50 if it can get that high again, but everything looks pretty strong for oil at the moment. And very quickly on natural gas, came off the support area, bounced back right back to the highs of late January, and then fast approaching the recent highs near 580 as well. So this looks very strong. Everything aligned correctly, looking like it's got more to go on the upside. Okay, small caps IWM ETF representing the Russell. You see the highs we had mid-January. We had a polarity area near 116. It's right back to those levels again. So again, the suspicion I had before was if risk was truly on, you'd think this would be much higher. Nasdaq is making new highs, semiconductors are making new highs, but small caps are not. So it's a little weird. There's still a dead cross with a 20 below a 50. 50 is kind of flat to barely rising. 8 moving average still below the 20. So everything's clustered together, coming into a polarity area. 116 to a resistance area just slightly higher at 117.50 to 118. Again, the notion would probably be that this will be resistance and that it'll want to come back toward the moving averages before it decides which direction it ultimately wants to take and resolve itself. So that's the notion. It doesn't have to be that way. It could blow through 116 and just keep going higher, pulling all the moving averages with it. It all cross. It only strengthen the trend at that point even more so. We will see. We will see. We'll see what they do in this vicinity here. Now, we don't typically show these very often. The transport here, you can see the reversal. It gapped higher into 132 in reverse. So this is one of the few in sectors and so on charts that we've shown that actually show sell signals or sort of reversal candles like this right now. So that's one of them. And then the other being retail, RTH, you can see right into a little bit of resistance near 59 and a pullback, a little bit of a red candle, finishing almost flush for the day. Then essentially, but you see the 8th coming over a declining 20 with a declining 50 above, so it's trapped. So two back-to-back charts here that are nowhere near their highs, that are still struggling with reversal candles. So let's move over to the VIX. And the VIX earlier today was green. You can see that large upper shadow. So it gapped higher on the open and went green for most of the day, back into this $15 area right below the 50-day moving average, as well as below a declining 8 moving average as well. Potential resistance based on a window there as well. So it's trapped here between moving averages, between support and resistance levels as well. Very much oversold, whereas the markets are very much overbought. So it's a little weird. It's almost like an inverted hammer, which gives you a little bit of inclination that maybe the bulls are stepping in, looking like there's at least the selling has slowed down and not maybe stopped, that we might see at least some kind of a pop back toward the window at 16.50 to 17. That may be what we see at least initially. So let's keep our eyes open for that. Otherwise, any kind of failure into 13, you're probably looking all the way back down to 12 or lower once again.